Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, November 13th, 5:03 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days in the NASDAQ 100 and S&P 500 back on November 1st and November 2nd. Can check the trend gauge over here. See, we've got the green arrow on market leaders, plenty of nice leaders responding positively to earnings, holding the gains and following through to the upside, several base breakouts too. Then looking at the 5 major indexes, we track them against their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. Got the green arrow, 4 of the 5 trending above their 21-day moving average. Small caps, the lone holdout. Love to see a change in character in the IWM get above 170 and log some gains above that key support resistance level, which would take it above the 21 EMA. Mixed bag on the indexes versus their 50 and 200-day moving averages. We've got the large cap indexes, the Dow, the S&P, and the NASDAQ 100 trending above both levels. We've got small and mid caps lagging below both levels. So what happened today? After the close on Friday, Moody's came out and downgraded the outlook of the U.S. credit rating, citing specifically budget deficits and rising interest rates. And that caused some people over the weekend to call for a Black Friday or a Black Monday, big move down. This is the end, blah, 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 the typical stuff that the fear mongers dredged up. And the thing to remember is that this had already happened. In fact, Moody's was the lone holdout in downgrading the US credit rating. So it's really what took them so long. And what we saw was a minor gap down about 0.3% on the S&P, 0.4% on the NASDAQ 100 and the small caps. But within the first 30 minutes, buyers showed up. Not a rip-roaring rally, but cut the losses positive at some point during the day across all the indexes, a little bit of a fade into the close, but all in all, a win-win for the bulls. Anytime you can send the bears away with singed fur is a good thing, and I think the bulls accomplished that today. Here are the final numbers. The big seven up 0.30% on the day, led by Tesla, which had been the weakest of the big seven for the last 2 weeks, up 4.22% today. So looking for a change in character there. RG8, this is our 8 growth ETF composite, up 0.11% today. We like to see that the FFTY, this is the IBD 50 index, which contains leading stocks, up 0.66%. Always good to see leading stocks holding up. And we've really seen that since the follow-through day on November 1st and 2nd. S&P 500, as I said, gap down 0.28, was down worse than that overnight. Closed it, did turn positive at some point, but faded a bit. Just a paper cut, down 0.08%. Cut kind of in line with the equal weighted S&P 500, down 0.13%. NASDAQ 100, weakest index on the day, down 0.31%, equal weighted, slightly better, down 0.23%. Dow Jones Industrial Average finished positive, up 0.16, mid caps down 0.14, Russell 2000 basically flat. 60/40 global stock and bond basically flat. Not a lot of change either on the stock or the bond component of that. In-house GROTECTION up 0.06%, despite one of our larger holdings having a tough day, and we cut some of that. We'll talk about that when we get to the tail of the tape and show some other charts of interest. Let's go right into it. Here's the S&P 500, and what we like about this is the negative reversal happened last Thursday on a weak long-term bond auction that the U.S. had, was completely shaken off on Friday, and we blew through this 4385-ish to 4400 resistance level, closed above it. The good thing today with the downgrade is putting in the lows early in the day. Let's go to a 5-minute chart here and you can see pulled back. What was the low in the day? Right around this 43.93 level. Let's go to the 60-minute chart. Got 43.85, 43.93 all over this area. So this is the former resistance level, including the false breakout here on 1017 that led to the last leg down in the three legs down before we turned higher, put in a cup and handle, and then broke out above that level on Friday. Back tested right at that 43.93 level. Back tested and held. You can see the two nice bars here on the 60-minute chart, and then the consolidation into the close. I call that a win for the bulls. So we tested this level that we broke out from. It passed despite negative news, got back above the 4,400 level. You can see 4,400, a battleground over here in June, battleground for a couple of weeks here at the beginning of August. The level that was broken as part of the second leg of the three legs down, we rallied up right into that resistance level. That former support, now resistance level around this 43.85 to 43.94 level before the third leg down that we're recovering from right now. Blast through that area, back test it and hold it. This is exactly what you want to see if you're a bull. And today's lows and really extending down another couple of points into this 43.85-ish area. Got the 8 EMA coming up to meet that probably in a couple of days. So providing some more resistance on any pullback that we might see. And to me, I see it as a win for the bulls. Let's go to the NASDAQ 100. Tight inside day there. Look how tight the range was. Spent it in the upper third of Friday's range, really similar to what's going on with the S&Ps. We've got the continued strength for over 2 weeks now on the NASDAQ 100. That index typically leads on the way up, and that's what we're seeing. Let's go to the Dow Jones Industrial Average, the only of the big cap three to have a positive close today. You can see it making higher highs above this recent consolidation off of the lows, so good stuff there. Let's go to MDY, mid caps, holding the 21-day on a pullback. That's the green line there. So good stuff there as well. The one laggard, the one holdout, what the bulls want to see. Finish slightly positive inside day. Can't get through this green line here, the downtrending 21-day moving average. We busted through it a little over a week ago, gave it all back, most of it back in 4 days. 2 days of consolidation now inside this big down candle on Thursday, and need to see a sustained break above this 170 level. We've talked for a while about how 170 has been a resistance support level, and right now it's acting as resistance. We want to get through that, turn it to support, and see if small caps can start doing some much better things than they've been doing. Certainly the laggard of all 5 indexes for months now. Those are the 5 major indexes. Let's go to the VIX. VIX closed near the lows of the day, gapped up. Let's look at a 5-minute chart here. Gapped up along with the indexes gapping down, but kind of the exact opposite of what you see here on the indexes. And, that's typical of what we see. And below that 15 level, that's where the indexes have done their best work this year. So good stuff there. Let's go to the dollar. 5-minute chart on the dollar, you can see the dollar initially gapped up and then faded. And then as the dollar faded, the markets started to rally sideways into the close, just similar to the way that the index is based. And still above the 50-day moving average, hanging out around the 21-day. Not that they're more reference points on non-stocks from a technical analysis standpoint. So how did the dollar translate over to precious metals? Gold up on the day, reclaiming the 200-day moving average after initially being weak. Gold stocks couldn't get any gains, down 0.8%. And silver positive. How about Bitcoin? Going down 1.6%. So still trading inside this big range day of last Thursday when it broke out above this, emphatically broke out above this range from this double bottom base. Let's flip over to bonds now. Bonds traded pretty tightly today, but closed near their lows of the day. That means that rates close near their lows of the day. That's what the market wants to see. You can see the gap down on the bond prices corresponding to a gap up on the bond yields, and kind of really the same pattern intraday, at least, as what you see on the indexes. And we kind of like to see that because uh, anytime you've got rates coming down, it's considered a tailwind for stocks. So really what we're seeing is a pretty tight consolidation here over the last 2 weeks after a gap off of the lows. Bulls want to see this resolve to the upside. Let's flip to interest rates, TYX. We've been talking about uh, this triangle that we've been in rates. Which way will it break? And if it breaks, will it be a false break? Always got to be alert for from failed moves come fast moves. Same situation here. TNX ran into the declining 21 day. Arguably, this is a false breakout on rates, gapped up on the news, closed near the lows of the day, puts it back inside this triangle. From failed moves come fast moves. If we see that tomorrow, that will be a benefit for the market. So that's one of the things that we'll be looking for tomorrow. All right, let's go to the tail of the tape. You can freeze this. I'll hit the highlights. We've been up 9 of the last 11 days with today's consolidation day. 9 days above the 80 EMA, 8 days above the 21 EMA on the S&P 500. Mixed bag on, you can see, is that right? That is right. XLK and XLU were the worst performers. Bitcoin and Bitcoin complex took a break. ITB took a break. That's consolidating nicely. We like that setup. And semiconductors weak today. On the upside, uranium, oils, ITA. Big component of that is Boeing, and Boeing won some orders over at an Emirates air show, and biotech, which has been a laggard, having a nice day today. We'll take a look at some of these as part of the focus list today. What did we do today? Datadog was one of the top 4 that we've been looking at. We took a position in that today. On the other end, we trimmed SELL-CIUS, which has just acted like absolute garbage. We'll talk about that when we get to the focus list. We also bought QLD. That's the 2 times NASDAQ 100 and AMD on today's pullback, raising our exposure from 1.31 to 1.47. Bottom line on the day, indexes gap down on Moody's U.S. credit outlook downgrade, but buyers showed up within the first 30 minutes. That leaders acted just fine. This is what you like to see in a bull market. Not all leaders acting fine, though. We got stopped on half of our SELL-CIUS position today, and this quite simply is not acting the way you would expect a leader to act after an earnings gap. Now, I don't know how SELL-CIUS splits 3-for-1 before tomorrow's open. I don't know if this had anything, the weird action had anything to do with it, but let's just dissect this as an example of what you don't want things to do after they have their earnings gap. So here's the candle on earnings day. Uh, Remember, we bounced off this 150 level for SELL-CIUS that had been support. Uh, had been resistance over here. Its prior earnings report, it gapped nicely out of there and continued higher. This is forming a stage 2.3 base, which is arguably a 5th stage base. Yeah, you have to understand the way they count bases on inside of MarketSmith here. Regardless, 150, a support level. 4 nice days up. This started with the rally off of the lows on 11.1 at 150. Then it reported earnings. Let's go to a 15-minute chart here. You can see some of the craziness on its earnings day. This is this day here on the 7th. So opened up high, everybody raving about the fundamentals, pulled back hard, rallied into the close, rallied the next day. We took some position here and here when it showed strength. And then when it got near the highs of the high volume day, that was it. Buyers dried up, sellers showed up, and this has been nothing but a sell-off over the last 3.5 sessions. We got to obey our stops. This is not what they should look like. Should have held the 50-day moving average, should have held the 21-day moving average. It didn't. We are so as I said, we bought 2% position 3 times on it. We ended up selling half. So full sell of the third buy, half sell of the second buy. Our first buy is also underwater. We're keeping a close eye on that, and any more damage, we'll get rid of that and just take our losses because this is not how it should have acted. What else shouldn't act that way is ELF. Kind of similar on earnings day, a big candle, big range, kind of. Uh, Remember, ELF was a big leader, and then it just started selling off into its earnings report. Still good numbers on its earnings report. Still 62% gains forecasted for next year versus 64% earnings growth forecasted for next year versus a 34 PE. But this is a classic example of the fundamentals always look best at the top. And this is why we buy on technicals and fundamentals, but we sell only on technicals. This is one of William O'Neill's rules. And it really comes down to the fact that fundamentals do always look best at the top. Uh, ELF tried to rally near the 200-day moving average and couldn't hold it, couldn't stay above the 21, now broke the 200. So that's another example of how stocks shouldn't act after an earnings report, even though that earnings report might show some initial strength. Another example of it not happening as well as we would like it to, although not to the worst degree. But I'm going to show some better charts here. But SMCI having some trouble. This was a big winner. From 2 earnings reports ago, big winner went from 120 to 357. Gap down on its last earnings report despite good numbers. Went sideways. Another earnings report, big candle. That's typical. Made higher highs, but now not holding the 50-day and the 21-day. Broke below them today. So that's just really not what you want to see. This isn't as bad an example. Let's take a look at a couple of other ones that are showing some indecision. App earnings on Friday, big Friday candle. Let's look at a 15-minute chart on this. Big gap up, immediate sell-off, but buyers starting to come in. This is what we kind of were expecting with SELL-CIUS is some better action here. But look, today when it got near the top of the high of the earnings gap day, it started selling off. And you see it giving back down 5.44% today, giving back a lot of the move up from the second day after its big earnings candle. So for now, this is a failed breakout of a double bottom base, and that's a stage one. So we kind of would have expected that one to work. Let's take a look at a couple of other ones. VRT looks like it wants to resolve to the upside now. Here's its big earnings report day. Closed below that low on the second day, but it's been rallying since then. This is a stage 2.2 flat base, broke out and failed. Big candle on earnings, broke below the lows, but now buyers coming in since then, holding up on a relative basis. As you can see, the 3 peaks here on the relative strength line, as well as on a price basis. So this may be one that's going to resolve to the upside. Let's look at one that's absolutely doing everything that you would want it to do, and that's DUOL, making all-time highs, up 21% on 438% volume, follow through on the second day. Then today, this morning, every day I have a underperforming list and an outperforming list. This gap down and continued lower, but look how buyers came in here right near the highs of day one, right down here around the 202, 203 level. Buyers came in and recovered, and by the end of the day, this was positive. This is exactly what you want to see. It held the high of the gap up day, held the 200 level, and closed at the high end of the day. Another recent earnings winner that's doing what you want it to is Wing. Here's the big earnings candle, day 2 higher high, day 3 higher high, 4-day consolidation after that. Notice the volume drying up and then volume coming back into it today as it took it up to the 220 level, sold off from that 220 level as that's near the high volume from its two prior earnings ago, and that's what's formed this big cup base. Just may need to handle more around this 220 level, but you want to see them consolidate a little bit, make higher highs, and that's one of the reasons why we bought Datadog today in the portfolio. Here's the big earnings move up on 590% volume, up 28.5%. 4-day consolidation moved out above that today. We took a starter, 2% starter on this, pulled back a bit after that. But the bottom line is it's holding the gains, not doing what Celsius is doing, and not doing what Elf did. And this is how you want them to act. And if they're not acting that way, you got to remember some of the best traders only have about a 50% batting average. They're quick to recognize when things aren't working and cut them. And that this is the only one of the 11 names that we've bought, 12 names that we've bought since the follow through day. This is the only one that's negative. So this one being Celsius, the one that we cut today, it's the only one that's negative. So cut your losers, feed your winners. NASDAQ 100 on the pullback today, as I said, we added to that, bought it acted just the way you want it to act. Pulled back, found lows within the first 30 minutes. This is why we always jot down the open 30-minute range. Because if you break below it, that means bulls are in charge. If you break, or bears are in charge. If you break above it, it puts bulls in charge, and that gives us just a little more conviction on either leaning one way or the other on the market. And then AMD, all semiconductors. Had a long talk with Alex about this today. Uh, he's a consultant that we work with, trades full time for a living. He was initially concerned that AMD wasn't doing as well as it wanted to, as well as we wanted it to, but then we started going through a bunch of different semiconductor charts, and really all semiconductors were down. NVIDIA was one of the lone um, bright spots today, with it being up and down on lower volume versus this very nice candle. It's been acting really well since its earnings move up, continuing to make higher highs. This 120 area, a little bit of a resistance area you can see over here from July. Normal for it to pull back here, and it's still above the 80 MA. And I say frequently, you can't complain if a stock is above the 8 EMA. That's going to wrap it. As always, like to hear from you. My email is don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. That's why we set stops like we did today in Celsius, and we will admit when we're wrong. Arguably, we could have let some of it go earlier, either last week when it started breaking the 50 or earlier today. But in a bull market, we try to give things to the end of the day to see how they're going to respond. But this had sellers all the way into the close, so we cut half the position. And with that, I'm going to wrap up the video for Monday, November 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.